Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.
Hi, this is Debbie Marcoux, the mortgage mom. Are you a homeowner swimming in debt? Do you have a very low interest rate on your mortgage and that's what's stopping you from doing a refinance to get that debt paid off? Give us a call. Let's talk. Let's go through the numbers. Let's see if there's not an opportunity to get that debt paid off and still save you money every month. Let's get your cash flow back in order. Give me a call. The number is 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Or head on over to our website to mortgagemomradio.com. All right, so welcome to Mortgage Mom Radio. Sorry, I was a little stuck waiting for that to end. This is Debbie Marcoux. I am the mortgage mom, and every week I bring you guys new information about all things real estate and mortgage. We have talked about just about everything on this show. From last week, the roller coaster of the mortgage rates. We're up, we're down. What exactly is going on? Why is that happening? We have talked about the Federal Reserve. That's going to be a big topic next Wednesday. They are coming out. They're going to make another announcement about that. So I'll be one of the first on here on Wednesday, right after the announcement's been made, to let you know exactly what took place and what are we seeing, what are we feeling. I do want to remind everybody that if you love the show, it's interactive. I want to know you're here. I want you to tell me that you're watching. I want you to give me a thumbs up. I want you to ask your questions in the feed so that I can read those out loud and answer them for you. The best shows that I have are the ones where everybody interacts. It definitely helps to keep the content moving in the direction that you, the listeners, want to hear and the answers that you guys want to have. So please feel free to put those in there. Heather jumped on. She says, hi, everyone. Rhonda Clark gives me a big heart. My dad says hi. And Local Trunky says, good afternoon. Giselle gives me a fire sign. I love that. Thank you so much, Giselle. So once again, remember, this is interactive. You are more than welcome to put those questions into the feed. If you want to know when I go live so that you do not miss a show, please remember that you can opt yourself in. You'll get a text message with a link once a week. And I promise that's it. I won't spam you. I'm not trying to sell you anything on the side. But you will get a link once a week to let you know that we have gone live. So all you need to do is text the word MOM, M-O-M. That's it, MOM. Same name, forward and back. No parentheses, no opt-in, no nothing. Just MOM. Text that word to 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Just text the word MOM. It'll get you all opted in and you'll get that link once a week. Now, I do want to say I'm super excited. Today is the first day that I have been able to figure out how to get us simulcast streaming to Instagram, which is very exciting because a lot of you don't necessarily log into YouTube, or maybe you don't use Facebook, and Instagram is your favorite spot. So we are finally streaming for the first time live today to Instagram as well, which is very exciting. Lyndon gets on, says hello. So thank you so much for joining. Giselle says, love this show since it helps me understand how mortgage rates are impacting the residential market. So thank you, Giselle, so much. I love that. Carrie gets on. She says, hi, y'all. And Giselle says, I have my calendar reminder set up so I don't miss your show. And she says, congratulations. So thank you so much. Today's show, and one thing I do have to say is that since Instagram is new for us, I'm not sure if I'm going to be able to see those comments on my computer screen. I can see Facebook comments. I can see YouTube comments. I'm not sure if I'm seeing Instagram comments. So I'm going to have Mikey, my producer, check out Instagram and let me know if we can see those or if he's got to read those to me separately. So bear with us. This is our first show that we are streaming live on that platform as well. Michael Manriquez gets on. He says, hello, everyone. So Michael, thank you so much for joining. Sure do appreciate. I love, all of you guys jumping on and being part of the show. So today we are going to be talking about refinance. I have not talked about refinance in a very, very long time. Interest rates are higher than where they were, and a lot of people have very low interest rates on their homes, and they're not necessarily interested in doing that refinance right now. We went through a big cycle of home equity lines of credit, anybody looking to try to get some cash out for debt consolidation, maybe home improvement. We're going the direction of the equity line. And I've been talking a lot about purchase on this show. Purchase, because to be honest with you, this really is a fabulous market to be in purchase, to be looking for a new home. And we've talked about that week after week after week, but I've got to help my homeowners as well. And we do have some reasons why a refinance would be a great option right now, a very good opportunity. 2 weeks ago on my show, I had one of our followers get on and ask, do you think that this is a good time to refinance? I said yes, and I promised that I would get back to that question, and then we ran out of time. So I am devoting this entire show to refinancing right now in this market with interest rates being higher, assuming that you have a very low interest rate on your current mortgage, and where you might think it doesn't make sense and you might be feeling like you are panicked about refinancing. Maybe you're feeling a little bit numb, I just can't do it. I can't get rid of that interest rate. We're going to go through some ideas. We're going to go through some scenarios. I'm going to show you how other homeowners that we have in process right now with loan applications in the system are actually getting higher interest rates, but it is still benefiting them to do that refinance. So that is what we are going to focus on today. It's going to be a great show. Again, I want you guys to ask your questions. I want you to put them into the feed. It is very important that I get those answers to you, and I love it when you ask the questions. So please do not hesitate. I can see that Claudia jumps on. She says, hello. Lyndon says, it's Linda here. She's right. No spam. Had great results working with this company. So, thank you so much. I do appreciate that, Linda. And we don't. I promise it is one text message a week. That is it. I let you know what we're talking about and give you a link to join. So please don't hesitate to opt in. We use everything trying to keep everything the same. So it's the same phone number to call my office as it is to text the word mom to opt yourself in. It's always the same number for everything. So it's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Text the word mom to get yourself opted in so that you can join us once a week, or call our office to find out what your options are as far as purchase or refinance. We're here to help. We do have our website, of course. Everything is with the radio, so mortgagemomradio.com, and you can actually book your self-appointment right there on the website. You can send me an email through the website. We have calculators on the website. There's a lot of great information on the website that are tools at your disposal, so check that out as well. So Sandra jumps on. She says, hello, Debbie, listening to your live chat. Sandra Moncada, I miss you so much. Haven't heard from you in years. Me and Sandra go back many, many years. She was a real estate agent out in Orange County. We used to do a lot of business together. So Sandra, I love that you're jumping on here, and I haven't seen you in quite some time. So we are going to take a very quick break, you guys. I'm going to run 40-second commercials. So it's going to give me a minute and a half to grab my notes for today's show. I've got some scenarios that we're going to talk about. Why are we talking about this today? I've done some calculations to keep things easy for you to understand. So let me grab my notes. Let me grab a drink of water, and we'll be right back. So stay tuned. Hi, this is Debbie Marcoux, the Mortgage Mom. Are you a homeowner swimming in debt? Do you have a very low interest rate on your mortgage and that's what's stopping you from doing a refinance to get that debt paid off? Give us a call. Let's talk. Let's go through the numbers. Let's see if there's not an opportunity to get that debt paid off and still save you money every month. Let's get your cash flow back in order. Give me a call. The number is 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Or head on over to our website to mortgagemomradio.com. Hi, this is Debbie Marcoux, the Mortgage Mom. Have you been thinking about buying a new property or buying your first property and you have no idea where to get started? Well, it's our job here at Mortgage Mom Radio to educate you and to get you that game plan to get you moving forward. Give us a call. It's 844-935-3634. That's 844 We Lend for You. WELEND and the number 4. Or head on over to our website to mortgagemomradio.com. You can book yourself an appointment right there. It's a free phone consultation and we'll get you started and on your way. All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and as I promised, we are going to be talking about refinance today, and I think it is important for you guys to hear the numbers, right? So the one thing that I do want to remind you all of is that every single person has a different scenario. Every single person owes a different amount on their mortgage today. They owe a different amount in debt. They've got different interest rates on their credit cards. They have different interest rates on their mortgages. They have different interest rates on their home equity lines of credit. So what I'm going to go through today are just going to be scenarios. They're going to give you something to think about, okay? So I just want to make sure that we all understand. I'm giving you the disclaimer that as I'm talking about numbers, that doesn't mean that I'm guaranteeing you that this is what your numbers would look like. I'm not telling you that this is the interest rate that you would get. I'm not confirming for you that these are the interest rates that you're paying on your different kinds of mortgages, but I'm giving you scenarios that I think are important for you guys to hear because there's a very good chance that your situation could be very similar, which would give you an idea that like, hey, it might be a really good idea for us to pick up the phone and to reach out and to call the office, talk with us, and find out what your numbers would look like for you. So the reason that I started thinking about this, so like I said, a couple weeks back, I had one of our watchers ask, do you think it's a good time to refinance? And my answer was yes, but then I didn't get to elaborate. So that was the first thing that kind of drew me to this show. But then on top of that, over the last couple of weeks, we've actually taken quite a few loan applications in for refinance, from current homeowners that are in a pickle. Then I started doing my research like I always do, and I started reading articles and I started looking up things. And so I wanted to see, what is the average household consumer debt right now at the moment, credit card debt. So it was very hard for me to see 2023 numbers. I couldn't find any of those published, but the number that I did see from 2022, which we do also know that most people have actually gained more debt since 2022 into 2023 due to inflation, things costing more and having to put more on credit. But in 2022, it said that the average household had about 8,000. It was like 7,900 and change in household credit card debt. And this is across the nation. This is not just focal, in California or, West Coast. This was across the nation. And this was in 2022. But the number that I found that was really important to hear was that 1 in 5 people actually had more than $20,000 in credit card debt. And again, this was from back in 2022. So where we are in 2023, if that number is still 1 in 5 is 20,000, or if it is maybe now 1 in 5 is 25, or 1 in 5 is 30,000, that's still a big number it's a big number to have in debt, and especially in credit card debt. Then it got my brain thinking. So, I'm a woman, right? My head starts to spin and I start to think one thing and then I roll over to the next thing, right? So I started to kind of analyze things, and our clients will call us and we do what's called a blended rate calculator. So when they call us, they give us what the debts are, the balances that they owe, the interest rates on that debt. what their minimum monthly payment is. And then we do what's called a blended rate calculator to see what their overall interest rate is of what they're paying on all of their debt combined. So the average of what I've been seeing right now in personal loans is anywhere from, 12 to 15%. If somebody has a personal loan, maybe they took a loan from a SoFi or a lending club and, they wanted to pay off their credit card debt and consolidate that way. And we're seeing interest rates that seem to be averaging around 12 to 15% is what's been coming across my desk. As far as credit cards, I thought, you know what? That prime rate keeps going up. I keep telling everybody every time that we're talking about the Federal Reserve and that interest rate going up again, I keep saying, where you thought your credit cards were before, they're not there anymore. They're definitely higher. You need to take a look. Well, I've actually never pulled up my own credit card and looked to see what is the interest rate if I carry a balance on that credit card. And so when I looked at it today, I about fell out of my chair. So I have a credit card. It's with Capital One. I've got excellent credit. I have no lates. I have no bankruptcies. I have no collection accounts. I have nothing. I've had this credit card with them, I would say, for about 9 years, maybe 10 is what I've had this one account open for. And if I had a balance on this card today, my interest rate on that balance, if I didn't pay it off at the end of the month, was 29 point something percent. I don't remember what those small digits were, but we're talking almost 30% is what the interest rate was on that credit card. So if you start thinking 1 in 5 people have credit card balances over $20,000, that means that they're not paying those debts off monthly. If those interest rates on those credit cards are in the 30% range. And so then I started going back to these blended rate calculators that me and my team have been doing over the last couple of weeks, because this is kind of where, the market is turning to. Many of those clients, their interest rates were right about the same on those credit cards, some of them a little higher, some of them a little lower, but that was about an average. So the numbers that I ran for you guys today are using averages. And again, I just want to make sure that I'm giving the disclaimer that your situation could be different. Your interest rates could be different. You might have a credit card that you did a balance transfer and you've got 0% for the next 12 months. And so that's going to be a different conversation with you than somebody that has, the $20,000 balance, or they've got 3 or 4 credit cards making the $20,000 balance. Those credit cards are maxed out. Because those credit cards are maxed out at the top of their limit, now their credit score has dropped, because we all know our credit score is based on how much credit availability do we have to what our balances are, what do we owe. So we know that if we're maxed out, our credit scores are going to be lower. Well, if your credit scores are going to be lower, you might not have an opportunity to do that balance transfer for that great interest rate for that 12-month period. So I'm talking to anybody that right now has some debt going on, and like I said, they're feeling paralyzed. They think that refinancing is not the right step. We're going to talk about that today and some scenarios of where it is the right step. And you might find that this is something that really could benefit you and your family. So we're going to jump into that. Sandra says, I will call you soon. So Sandra, I would love to hear from you. Giselle says, I think the average interest rate for a credit card is 24.99%. So Giselle, like I said, sometimes that's going to vary. It's going to differ. But again, I've got excellent credit. I have an account that's been open for a long time. I don't carry a balance on that credit card, and that's at 30%. So, they've gone up quite a bit when we've had so many rate hikes and so quickly that we think that credit card that's 24% is still there. And we're shocked to see 32% when we log in and we actually look at it. So I do think it's going to be somewhere between 25 and 30. It's definitely high. Claudia says, true reality on these credit card debts. And it really is. There's, like I said, many of you are struggling right now. You've gone to credit cards to try to make up for the difference, especially here in Southern California, in Los Angeles County, in LA, Orange County, Riverside. We've all felt that horrible pinch from our gas prices at our house, not just gas in your car, but the gas this winter that we paid, the electric bills and, Edison's new billing. We're feeling it in the grocery store. We're feeling it at the gas pump. We're feeling it everywhere. Everything's gotten very expensive. And so a lot of people have gone to their credit cards to try to make ends meet. They've got these fabulous interest rates on their first mortgages that are at like 3.25%, 4%, 5%. And they're thinking there's just no way. I don't want to do a refinance right now for a new mortgage at 7% or 7.25%. So we're going to go through some of those. Again, we're going to go through those scenarios to give you guys some ideas of why did it benefit this client that I have right here in my hand? Why was this a benefit? Why did they decide to pull the trigger, do the loan application, and move forward with the refinance, even though they were going to lose that very low interest rate that they currently have on their mortgage today? So the first one that I did, and it is not a client that we have in process. The first one that I actually put together, and I made notes. I did everything for you guys, but I put together averages. So the first average that I looked at was what was the average credit card debt, and I saw again the 1 in 5 have over 20,000 as of 2022. So I actually used 25,000, assuming that number has escalated in 2023. So I used 25,000 in credit card debt. I assumed that this person had reached out over the last year and a half where people didn't want to refinance and they felt that taking an equity line of credit was a better option than doing a refinance for the cash out that they needed. So whether they did home improvements or whether they were paying off credit card debt, they went for that equity line of credit. The average equity line of credit that I have seen come through our doors, so I'm using my knowledge that I have seen, okay? So every area, every city, every loan officer is going to work with a different type of borrower, different loan balances. We work with a lot of clients that are within the conforming loan limits. We work with a lot of first-time buyers. We work with a lot of people that are in that 750,000 sales price, million sales price, 500,000 loan balances, right? So I pulled up what's been the average equity line of credit that we have written over the last year and a half. And the average number that we have written was $150,000. Then I pulled up what is the average loan balance that we have seen in LA County. So in LA County, the average loan balance for somebody that owns a home right now was actually $571,000. So I used the number of 500,000, assuming you bought your home a year or two ago, your loan balance might be a little bit lower. Then you decided to go ahead and take a home equity line of credit to maybe do some home improvements. And now you found yourself that you've got some credit card debt and you're about 25,000 into credit card debt. So those are the numbers that I started with for this very first scenario. So this person has a current mortgage of 500,000. Their current interest rate is 3.75, so 3.75. So I'm being very, very realistic in somebody has a fabulous interest rate right now today on a pretty decent sized mortgage balance, 500,000. They took an equity line of credit at 150,000. Now, the next thing that I can tell you is that most of the lines of credit that we have written were around 10% and as high as 12%. I looked up what is the average interest rate today on a home equity line of credit. This is across the nation. This is looking at credit unions, big banks, anywhere at all that you could try to find possibly the cheapest interest rate for a line of credit possible. And the average was 8.5% as far as a brand new originated equity line of credit today coming out of some of the lowest priced lenders for equity lines of credit. So I went with a very low interest rate on this 150,000. Again, the average interest rate that I see based on credit score, loan to value, so how much equity are you trying to take versus what your home is worth, plus what you owe on your current first mortgage already, is normally between about 10 to 12%. So I'm going very, very conservative to show you guys numbers with a new refinance today. Now, I assumed credit card debt. And again, like I said, I used 29% on that credit card interest rate that you're carrying on that credit card debt. So that scenario, if somebody called me up, assuming that they've got the equity to be able to do a cash out refinance, pay all of that off, roll it into one brand new mortgage, those monthly payments for them, their 500,000 mortgage payment, they're not in, 500,000 mortgage payment, their home equity line of credit, and the minimum credit card payment, assuming that they're making those minimums. They're not paying off those credit cards every month. That payment monthly was $39.95. Now, I did not include taxes and insurance because those taxes and insurance are going to go from, they don't go away. So that $39.95 would be plus taxes and insurance. And the new payment with a new refinance at a 7% interest rate would be $31.96. So let's call that $4,000 to $3,200. You're saving $800 a month, moving from your current 3.75% interest rate to a new 7% interest rate. That is huge. $800 a month is a huge amount of savings when things are tight, when you are struggling, if you are barely getting those minimums paid. That $800 a month is the utilities on your house. That $800 a month could be the extracurricular activities that you're having to pay for your kids that you have no idea how you're going to pay for them. So this was going off of averages and just some average numbers that I feel that I've seen and some average numbers that I was able to pull as I was Googling through, the internet and the different websites. Now, I actually have 3 more scenarios to give you guys that are actual current clients that are in process with us right now. So again, I just want to give you guys a good amount of scenarios so that maybe something resonates with you and you feel like, you know what? I really probably should call. There could maybe be some benefit. I could maybe get that monkey off my back. I could get my cash flow a little bit better. And remember, interest rates will come down, you guys. It's inevitable. They will come down. Are they going to come down tomorrow? Probably not. Are they going to come down in a year from now? I certainly hope so. Will they be down in 2 years from now? Probably. So even if you get yourself into a new refinance and you take an interest rate at 7% and you are saving every month, you still have the opportunity to refinance again when interest rates drop lower and to also lower that payment once again. So we're talking about right now. We're talking about what can we do for you right now to try to help you to be more comfortable in your monthly cash flow. So here is scenario number 2. Then we're going to go to a break. We'll talk about scenario number 3. And I want to remind everybody that if you have questions, please throw those into the feed. More than happy to read them out loud and answer them for you. So scenario number 2, and this is a real deal that we've got in the system right now, that this is a refinance for a client that it makes sense for them. So in this scenario, this client currently owes $118,000 on their first mortgage. Their interest rate is also 3.75%. They have a personal loan right now for $22,875. They have a second personal loan for $19,500. They have credit card debt of $31,200. Their monthly payments, and I took this right from their credit report, so these are accurate for this client. Their minimum monthly payments all in today. Where did I add this up? I've got 3101. Yes, 3101 is what they are paying in total payments today between their mortgage at 3.75%, their 2 personal loans, and their $31,000 in credit card debt. Their total all-in monthly is $3,100. Now, one thing that was special about this scenario, which I think is, again, something that I wanted to bring up, that I wanted to talk about on the show today, was that during COVID, when the mortgage companies were offering to you, some mortgage companies just sent you a letter and said, sign on the dot, don't make a payment, we're going to put you in forbearance. Other mortgage companies, you did have to call and you had to ask for it, but many of them put you into forbearance during COVID where you didn't make a mortgage payment. Then what they did is they sent you a loan modification after, once you started making the payments again, and they said, sign on the dotted line. And many of you have now a second loan that is sitting on the back side of your mortgage. So not only do they owe their $118,000 on their balance, but they also have $12,500 that they owe in a second that was from that COVID loan modification. They're not making a payment on that $12,500 right now. So I did not include that into the numbers of their total monthly right now out of pocket of $3,100 a month. Now, so we're going to consolidate everything. We're going to take their 118, we're going to pay off their 22,875, we're going to pay off their 19,500, we're going to pay off their 31,200, we're going to pay off that loan modification balance of 12,500. And they want $41,000 cash in hand because they want to do some improvements to their home. So their loan balance is going to actually go up quite significantly. We're going to jump from a 3.75% interest rate on their first mortgage right now today. We're going to jump to a 7.125% interest rate. And their monthly payment is now $1,913 a month instead of $3,100 a month. They're getting $41,000 cash in hand, and we're getting rid of that second that they owe on that loan modification. So in this situation, these clients are saving almost $1,100 a month. They're getting $41,000 cash in hand, and they no longer have that loan modification second on their property. So this was a really great scenario, I felt, for many of you to hear, because I feel like this is a very normal scenario. This is something that many of you could probably relate to. Now, when I run their blended rate calculator, because they provided us with all of the statements for all of the debts that we're going to pay off for them, their blended rate, even with their mortgage at 3.75%, but with the interest rates on their personal loans, the interest rates on the credit cards, their blended rate today that they're paying on all of their debt combined is actually 9.69%, even though it was so hard for them to walk away from that 3.75% that they have on that first mortgage. Now they're going to be at 7.125%. So even though it sounds so big and it's so scary, it is actually much better. It is a much bigger cash flow, and it is putting them in a way better scenario. Nicholas jumps on and says, wow, I need to do this ASAP. And yes, I just don't think that people understand it without hearing it, which is why I really wanted to kind of show you guys some scenarios, really run you through them, because again, I feel like it's going to resonate with you better to hear a real live story of a real live person that has debt like we all do, who's accumulated it based on the economy and inflation and everything that's been taking place. But you feel numb, you feel paralyzed because you are so worried about getting rid of that low interest rate on that mortgage. But you have no idea that you're actually doing yourself more harm by doing nothing and just continuing to accumulate that credit card debt at those 25 and 30% interest rates, and those personal loans at those 12 and 15% rates. And like I said, that home equity line of credit, if you have an 8.5% interest rate on a home equity line of credit, you are styling. That is not the reality. That is not what we have seen, not by any means. We have been seeing somewhere between 10 and 12% most of the time on those equity lines of credit that many of you decided to take instead of taking a new refinance. So that was actually one really great scenario that I wanted to bring you guys through, and I cannot tell you enough. We're going to go, I actually have two more that we're going to go through again, because they're all different scenarios, different reasons why these people have come to us and started the refinance. But something in each one of these different scenarios might be something that you're thinking, hey, you know what? This really could be something that's good for me to do. So I'm going to take a break. I need some water. If you guys want to call the office, you can do that. It's 844-935-3634. That's 844. We lend for you. WELEND and the number 4. The only thing I ask is have your mortgage statement, any credit cards you want to pay off. If you have a home equity line of credit, if you have a student loan, if you have a car, anything that you might be feeling like you might want to consolidate into a new mortgage, make sure you have those statements when you call, because it gives us then the opportunity to ask you for the numbers, run that blended rate, put those numbers together, send them off to you in an email, and then it gives you and whoever else is part of the decision making an opportunity to look at all and decide if it's something that you should do and whether you want to get that loan application started. So that would be really helpful. But please call the office, go to the website, book yourself an appointment. It's a free consultation. We do not bite. We do not push. We are not pushy salespeople. We are not going to hound you. We are here to consult you, to help you, to educate you, and to help you figure out if this is something that does make sense for you to do. It may not make sense for you, and we are going to show you the math, and you are going to make the decision if the math makes sense. So stay tuned. Don't go anywhere. We're going to keep going through numbers. We'll be right back.
Hi, this is Carrie Young with Mortgage Mom Radio. Did you know there are multiple home loan options available with little to no money down? Whether it's conventional, VA, FHA, USDA, or down payment assistance, let us find a loan that's right for you to get you into a home with minimal out-of-pocket expense. Give us a call. That number is 844-935-3634. That's 844-WE-LEND-FOR-YOU. That's WELEND and the number 4. Or visit our website. That's mortgagemomradio.com.
All right, so welcome back to Mortgage Mom Radio. I'm Debbie Marcoux. I am the Mortgage Mom, and today we're talking refinances. We haven't talked refinances in a very, very long time. We've been very focused on purchase. We've been very focused on getting, those home buyers, new homeowners, first-time buyers, everybody into new property. But I think refinance is really important. It's come up quite a few times, and we have not touched on it in quite some time. So that is what today is all about. If you are a homeowner, you own a home, you're feeling like you've got some debt, you're feeling like you don't want to do a refinance, your current interest rate is too low, it just doesn't make any sense to do it, you might be wrong. So today we're going to give you guys some scenarios where it did make sense for clients. It might resonate inside and it might make you feel like it is something that you should be reaching out and possibly talking to us about. So here is our next scenario. Again, these are all clients that we have in process. These are real scenarios. This might not be your scenario, so disclaimer. I'm not telling you that this is the interest rate that you will get. I am not telling you that this is the amount of money that you will save monthly. What I'm giving you is scenarios that we have in process right now that these clients are obtaining, and we need to talk to you directly to figure out what your opportunity is. We are not going to push you. We are not hard salespeople. We are math driven. We are education driven. We want to make sure that you've got the numbers, and then you're going to determine if this is something that does make sense for you and your family. So here is scenario number 2 that we're going to go through. And this is actually scenario number 3. I did my averages scenario. Then we did a real life scenario. This is real life number 2, actual scenario of the show number 3. So this one, the client has a current mortgage of $500,000. And again, I told you guys that was a number that has been very, very, seems like that's a very common number, is a $500,000 mortgage. Some of you might owe less, some of you might owe more, but that seems very, very common here very recently, especially in Southern California. So they have a $500,000 mortgage. Current interest rate on her property is 5.625. Her credit cards, she owes $23,568, and she has a student loan of $33,000. Her total monthly payments all in between her current mortgage, her current credit cards, and her current student loan is $5,015. That is what her current total out-of-pocket monthly debt is. Her interest rates, when I do the blended rate calculator, even with her mortgage at that big balance of $500,000 at 5.625% interest rate, because the credit cards are so high of what she owes with her balance, and because the student loan is actually not super low either, her total blended interest rate right now, she's paying 7.49%. So we are looking at doing a refinance for her to consolidate those 3 things: the credit cards, the student loan, and her current mortgage. The new interest rate that we've got her locked into is at 7%, and her new monthly payment will be $4,140 instead of $5,015. So again, this one is going to save about $900 a month in cash flow. That is a big savings. And please, you guys, remember, like I said just a little bit ago, yeah, 7% is not fun. Yes, it's a number that you think is ugly. Trust me, I've been doing this for a long time, got in this business in 94, got into mortgage in 01. 7%, 8%, 8.75%. I know you've all heard it and you don't care that those are actually very normal average interest rates. I get it. But remember that interest rates will come back down. And this same person is going to have the opportunity when interest rates come back down to get back into those lower interest rates. And now she's not only saved herself from the $5,015 to the $4,140, but now whatever we can get that next refinance in a year from now and 2 years from now, whatever we can drop that monthly payment to at that time, then she's saving even more. So in this scenario right now, today, in today's economy, with where she's at, she's maxed out on the credit cards. She's got, a $760 a month payment on the student loan. It's killing her. We are going to be able to get her about $900 a month in savings. So that was a fabulous one for you guys to hear, and a real true scenario with a real client that we have in process moving forward today. All right. So the last one that we are going to go into, this is a good one as well. I like it. This is a client who has a current mortgage right now that is actually owner carried financing. So when they bought the property, they took the note from the owner that owned the property. That person actually gave them the mortgage. So they're seller financing it. The interest rate on that seller financing right now is 5.5%. So, they've got a pretty decent interest rate right now. Current mortgage balance is $237,000. But they need to pay off the seller. They only had a couple of years before the seller wanted to be paid off, paid in full, go away. So they need to get the seller paid off. So they're in that situation. Then they also they had a home equity line of credit that they took for $80,000. That home equity line of credit, they did improvements to the house. They're super excited. That's what they needed to do. They wanted to get, kitchen remodeled and everything redone, which is great. But the current interest rate on that equity line of credit is at 11.5%. So between the $237,000 that they owe today and the $80,000 that they owe to the equity line of credit, their total out of pocket right now is $2,113 a month. Okay. They're paying 7% in their overall between their 5.5 on their first and their 11.5 on their equity line of credit. Their blended interest rate right now is at 7.01%. So basically 7% is what they're paying in a blended rate today. If we put them into the new refinance, which actually we just got the application put together, we're quoting them an interest rate today of 7.125. So it's a slightly higher interest rate than what their blended rate is combined. Their old payment right now between the two together is $2,113. New payment would be $2,136. So they're going to go up about $23 a month. They're consolidating both loans together. The equity line of credit is no longer adjustable. So when the Fed meets next week and they raise that interest rate again and that minimum monthly payment goes up again, they don't have to worry about that any longer or any future rate hikes. And not only that, but they are in a situation where they need to pay that seller off. That seller is, they only had so many months with the seller carry financing that they agreed to carry, and that, they were told they needed to get it paid off within a certain period of time. So they don't have a choice but to do the refinance, but this was a good scenario for you guys to see the difference. They're basically apples to apples, even with the current rate on their mortgage today at 5.5% and only consolidating paying off that that equity line of credit. So again, a great scenario, one I wanted to bring, to your attention. Maybe you're in that same position. Maybe you had some seller carry financing that's due. Maybe you took a hard money loan. Maybe you've got an equity line of credit. Maybe you got some credit card debt, some student loans, some car loans. You guys need to call us to see what it is that we could do for you to help you. Is there a way that we can improve your scenario, improve your situation, get you some more cash flow monthly, and help you to get through, the inflation and the economy and everything that we have all been dealing with here most recently. Rhonda jumps on. She says, amazing. Rhonda, it's so good to see you. I haven't seen you on before. I love that. Nicholas says, what's a good credit scope to do this refinance program? So I think what he actually meant is, what is a good credit score? So refinances, there's tons of different options. These are just the scenarios that I'm giving you guys the information on. But there's many different programs. We can do a refinance with an FHA loan. We can do a refinance with a VA loan. We can do a refinance with a conventional loan, Fannie Mae, Freddie Mac. You can do a jumbo financing. It depends on your situation. What do you owe on the house? What is your credit score? How much are all of your debts? What is your home worth? Based on all of that, are you a vet? Do you have that entitlement? Can you get that VA financing? I got to tell you, if you're a vet and you've got a VA loan that is available to you and you're feeling like you're in debt, you guys should be like Speedy Gonzalez styling our phone number right now to talk to us, because those interest rates are fabulous on those VA loans, and the cash out is something that, you can go to a very high loan to value. You can owe, really about 90%. I mean, the guidelines for VA say you can go to 100% financing. There's just not very many lenders that will write it to 100. So I would say 90% is about the average of what we see with most lenders willing to write that refinance. But at 90% of what your home's value is, if you have a home that's worth $1 million, you could get a cash out VA up to $900,000. Pretty simple, as long, of course, as you qualify for it. But depending on the loan program, to get back to Nicholas's question with credit score, based on your credit score, how much cash you need, your loan to value, we're going to determine what is the best program for you, show you what those savings would be. We've got programs where your credit score could be low as 580. And then we've got obviously much, much better programs and interest rates when you've got a lot of equity and you've got a really high credit score. We're going to put you into a totally different kind of loan program. But there's no way to know what your savings would or could be if you don't pick up the phone and at least call and find out. That is what I'm trying to get across in this show today, is explore your options. Don't just sit there paralyzed because your interest rate on your loan is 3% or 3.5% or 4 or 4.5 or 2.5. Don't sit there paralyzed. Don't continue to get more and more and more in debt, not paying off that balance every month, making minimum credit card payments, barely getting those student loans paid. And hey, student loan people, those student loans have been on deferment for almost 3 years. I mean, it's insane. So those student loans are going to come due and you're going to have to start making minimum payments. And if you're not prepared for that, or you haven't budgeted for that, and you're not used to it because you haven't had to make a payment in the last 3 years, you better buckle down and get ready and get prepared and start working that into your monthly cash flow, because it is coming. So, just mom advice. I know I'm giving you guys a little bit of mom scolding, but just, keep that in mind. Heather says, I love doing VA loans. Yes, Heather, I do too. They are my absolute favorite. Michael says, is a mortgage recast a helpful tool to get a lower monthly payment? And Michael, it is. So a lot of people don't know what a recast is. Some lenders, you can't do a recast. I know that if you have a VA loan or an FHA loan, I don't believe that those are eligible for recast. So for anybody that is listening that's wondering, hey, what is a recast? So let's say that you've got a mortgage balance of $500,000 and you somehow, came into an extra $100,000 that you would love to put towards your mortgage. You can call your lender on the phone and you can ask them, you can call your mortgage company, the 800 number on that statement, and you can ask them, could I make a one-time principal balance reduction? And then would you recast the loan? So can I make a $100,000 payment, bring my balance down to $400,000, and then would you recalculate calculate my loan payment based on that lower loan balance. Some loans that is possible, other loans it isn't. Today's show, obviously, if somebody had an extra $100,000 sitting in their account that they could be looking at doing a recast, they wouldn't be listening to the show about refinancing to get yourself out of debt. So a recast isn't going to help you in any way as far as debt goes, but that is something that is available out there. If you thought you wanted to lower your monthly payment, you've got some extra cash in the bank, you don't want to lose that current interest rate that you have that is so low and so great, it is definitely worth making a phone call to the 800 number or the toll-free number on your mortgage statement and getting servicing on the line and asking them if your loan is eligible to do a one-time principal balance reduction with a recast. So for everybody that might be interested in that, those are the words that you need to ask when you get them on the phone. Giselle says, do you have Spanish speakers on your team? And Giselle, yes, I do. I've got a wonderful girl. Her name is Jackie, and she can help with anybody that speaks Spanish. She says, great tip for people with student loans. Thank you very much. And Claudia says, thank you for making the time to put together these scenarios to be able to compare and see the difference. And Claudia, you are very welcome. Again, I felt that it was very important. We've been talking a lot about purchasing. We've been talking about buying yourself a second home, getting yourself an investment. Why now is a good time to buy, even with interest rates up. We have not focused at all on our homeowners. I have not given you guys any attention when it comes to talking about refinance. And quite frankly, for a long time, people didn't want to hear about refinance. You kind of get in that mode, where you got like those blinders on. And it's just, I've got a low rate. I'm not touching it. I'm not doing anything else. And it's really hard, for people to get that message through. But I feel like we're at a point in time as I'm reading articles that where 1 in 5 people have over $20,000 in credit card debt. That goes for homeowners as well. Many of you homeowners out there have equity. That was another, article that I was reading, was that the amount of equity that homeowners today have is it's unprecedented. I mean, property values really did go up significantly, through those pandemic years, from if you bought a home in 2019, 2020, 2021, and today's 2023, you've got equity in your home, and you might be able to leverage that equity if you can get past the stubbornness of being concerned about a number that's written on your mortgage balance or on your mortgage statement. So I hope that this resonated with you guys. I hope that I gave you some information. I truly hope that some of you guys go to the website and book yourself a phone consultation, call my office and ask questions, and let's see what we can do to try to help you guys if you feel like you're drowning. And again, we're here for education. We're here for support. We're here to do the math. We're not here to hound you. We're not here to push you. We are here to truly work with you to figure out what your best plan is. And if your best plan is to do absolutely nothing, that is going to be the answer that we are going to give you. That is how we work. And I will not accept anybody working for me on my team that doesn't work the way that I do. And it's all about you feeling good about the decision that you make, you making the decision for you and your family that was the right decision to do. It's our job to educate you, show you the numbers, and let you make that decision. So once again, I'm just going to give you guys our number. I want to remind you that you can opt in so that you don't miss the show. Super excited that we got on Instagram today for the first time streaming. Again, I have no idea how to see messages, any questions that would have come in on Instagram. So I'm sorry if we missed that, but we're going to figure it out before the next show. But number, how do you get a hold of us? It's 844-935-3634. That's 844. We lend for you. WELEND and the number 4. So you can call us. You can text the word mom. So it's not really, it's just an automated texting app, platform that's just getting you guys a link once a week. So we're not really answering questions through that. It's not really our texting number, but it is, you can text the word mom only, MOM, and that is going to get you that link once a week to let you know that we went live. Or you can head over to the website, mortgagemomradio.com. Don't forget the radio. You will not end up at the right mortgage mom. mortgagemomradio.com, and that will get you. You can schedule yourself an appointment. You can use all the tools on our app, all the calculators. You can send me an email. All those emails do come directly to me. So, we're here to help you in any way that we can, and we do hope to help get you guys some relief, some cash flow. And even if it's just one or two people that hear this that it makes sense for, we sure do hope that you reach out. So I hope you guys have a fantastic day. Michael says, thank you for your time. Always great. Thank you, Michael. And Rhonda says, you are and will remain my go-to. Rhonda, I love that. I love working with you and your mom. I remember almost every client I've ever worked with. I think you guys are all fantastic. But once again, I hope you guys have a great day today. It is Wednesday. If you're listening by radio on Saturday, hope you guys have a fabulous weekend, and we'll be back again next week, next Wednesday. Talk to y'all real soon. Bye-bye.
Debbie Marcoux is licensed by the Department of Financial Protection and Innovation under the California Residential Mortgage Lending Act, NMLS ID 237926. Also licensed in Arizona 0941504, Florida L076508, Georgia 69178, Idaho MLO 208023796, Illinois 031.0058339, Missouri, North Carolina I210940, Nevada 57237, Oregon, Tennessee 184373, Texas, Washington MLO 237926.
She's the mortgage mom. She can get things done when you're in need and don't know where to go. Pick up the phone and call mom.